What's up, traders? Welcome back to another video here at Liquid FX. So today we're going to be going over a very important concept in ICT, essentially the daily candle, right? The open, the high, the low, and the close. Why are these four things important, and how you can pick the high and the low of the day, or as accurate as you can to the high and low of the day, using some very basic, well, complex to start with, but basic ideas when you break it down in this video. So what we're looking for, we've got a bullish candle and we have a bearish candle. That's all you can have on the daily time frame, right? Either the candle goes up or it goes down. That's all you need. So from here, we're going to be breaking down a schematic, right? We've got obviously a bullish candle with a bullish schematic. Then we've got a bearish candle with a bearish schematic. So what we're looking at, here. So essentially what we see is we see the New York opening price, right? So New York midnight. So that's midnight in New York. At the end of the Asian session, what do we see? We see price nip down below, sweeping the Asian low liquidity and sweeping the liquidity of the New York opening price, right? This is the open of the day. Now we see an expansion. So we see an accumulation during the Asian session. We see manipulation in London. Then we see a distribution, breaker structure, right? Going into the London or the New York session, or both typically. And that represents our bullish candle. So we see the open, high, we see the open, high, open, low, high, and close, right? So when we see price close bullish, right? A green day, an up day. This is essentially what we're looking for. We're looking to buy near the low of the day in this region over here. This is called the AMD or the power of three or the Judas swing down here or turtle swing. They all mean the same thing. It's understanding the concept and pairing this with a narrative that will get you successful. Same in the bearish case, right? It's the same thing. We see the open, high, the low, the close. We're looking to sell as close as we can to the top of the day. And typically that will occur during the London session. So this is typically in the London session. It can be in the New York session, but typically it's in the London session between 3 to 4 in the morning New York time. Same as here, 3 to 4 in the morning New York time. So this is the very quick overview of the open, high, low, and the close, and how we can look at it pictorially and schematically before we take it to the charts. But just important to understand, right? We have the Asian range, the accumulation, the manipulation, which happens in London typically, can happen in New York, and the continuation always happens in London or New York. So if you can get these three things down, the power of three, you can predict the high or the low of the day and sell and buy respectively very close to the high or low of the day. That is a skill that can make you lots of money. So now let's take it to the charts. We're just going to dissect some euro dollar price action, right? So we're going to be looking at Monday the 27th of November and Tuesday the 28th of November. How you could get involved in trades just on the M15. We're not even going to go down. We're not even going to go down to the M5 because that's typically more for the members, right? But we're just going to be dissecting price action here on the 15-minute chart. So what we can see here now, the Asian session is already marked in, right? So what we see here is we see an Asian session just here in this range over here. And this is the Asian session. Now, the Asian session is the accumulation, right? The accumulation. So what's the purpose of the accumulation? Right? As the name suggests, it accumulates orders, accumulates liquidity, right? The market moves from liquidity pool to liquidity pool. So we're going to be using the Asian high and the low very carefully in this trade, as well as the New York midnight opening price, which is in this region over here, right? So we see the New York midnight opening price just here, okay, with the dashed line. This is a New York midnight opening price. So what do we see? We see very clearly price come up, sweeping the Asian high. Asian high swept, right? Ooh, just refresh the page, sorry about that. As we can see, sorry about that. So we see the Asian high swept coming down. We see the Asian low getting swept afterwards, just over here, followed by a market shift, market breaker structure just over here in this region. Okay, so what do? Accumulation, manipulation, distribution going up. Yeah, the distribution is confirmed with the breaker structure over here. Now, where can we enter? Where's our order block, right? One of my previous videos, we discussed order blocks. We discussed how you can get in from an order block. So we're not going to go into that in too much detail. If you haven't watched that, I highly recommend watching that out. As you can see, we have an order block over here. So what makes an OB or an order block, right? Three things. We want to see a breaker structure or a BOS. We want to see price leave a fair value gap. We want to see price in the discount in this region because we're looking for a buy trade. So as you can see, if we draw our fib from the swing low up to the swing high, what we see here is a nice order block in this region, just over here where we've marked out, okay? Just in this region over here. Here we are. Here's our order block, just in this region over here, okay? Now, as you can see, price respects it beautifully, right? So we can take a buy trade from here. You want to have your stop loss just below at the vicinity of the order block, just below, targeting a nice 1 to 3 trade, right? Using the power of 3 concepts. So what do we see here, right? What do we see here? We see a bullish day, just in line with what we have our schematic over here. So we see the Asian range accumulating, ending at the New York midnight price. We see price sweeping the Asian low, which is exactly what we see over here. We see price coming up, sweeping the high first, then the low, followed by breaker structure. Now we enter the next day for a beautiful 1 to 3, but this trade, as we can see, had a potential of 1 to 6 or even 1 to 7 using the schematics that we discussed over here, right? So I'm just going to break that down one more time. We're going to discuss things in terms of the why price does what it does, okay? Just from a bullish perspective over here. So what do we see? We see the Asian range accumulate price, accumulate orders, liquidity, liquidity over here. Then we see a manipulation. Now, what's the point of this manipulation? Manipulation, Judas swing, turtle soup, they all mean the same thing, right? If I can spell, mind my spelling. Turtle soup, they all mean the same thing, right? But why are we obsessed with this? What is it? What is it about this, right? Now, the manipulation aims to bring people or traders, uninformed traders, impatient traders onto the other side of the market, the sell side, before price breaks structure, and we enter after the manipulation, right? So we are informed traders that use the power of 3. Right? That's exactly what's happening over here, right? What we see, simply put, is we see an Asian range accumulating price. We see price sweeping early buyers into the market. Then we see price crash down, sweeping out those early buyers and enticing sellers. And then during the distribution bullish, the sellers get stopped out as well. So we, as informed ICT power of 3 traders, will use the open, high, lows, low and close with the schematic of accumulation, manipulation, distribution to enter trades like this, right? Using this is a fantastic trade taken in the Liquid FX community, taking buys here the next day, following up the narrative hitting the overall daily POI. So this is a typical bullish example. So I recommend you pausing your videos, taking any notes, sketching this down, and really getting this in your notes and just your head overall, right? The power of 3 concepts, how you can use it on any market, whether it's crypto, forex, stocks, commodities, you name it. This is your guide to using the lower time frames or even the intraday time frame like the M15. We haven't even got down to the lower time frame. We don't need to. Price is clear as day over here. Now, this is a bullish example, right? So as you can see in the markets here, EU, GU, primarily I traded bullish, so it's easier to find bullish examples in this region. And yeah, that's the basics of the power of 3. If you like this video, give it a like the video, subscribe, thumbs up. I look forward to seeing you in the next one.